Mal, everybody, I'm Cantonese Cat. Hey everybody, Cantonese Cat here. I haven't really made a video for a whole week. I'm gonna make a little bit of a longer one, just kind of rambling on. That's what you get for listening to me talk, by the way. If you want to listen to me, you can do 2xSpeed if you want to, but I'm going to take my time here and go through what my thoughts are in the overall market and show you some of the things that I'm seeing. I don't just look at charts in isolation. Matter of fact, the reason why I'm drawn to finance in general is not because crypto is cool, it's not because all these technical analysis are cool. It's because it's a window to give me an idea in terms of what's actually happening in the real world. And the thing about it that fascinates me the most about looking at charts is telling me a different story compared to what other people are telling you out there. All these fundamental analysts, all these CNBC analysts out there, all these no-man out there, not nomad, but no-man, that man that says, no, 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 this is not going to go well. We're going to have a crash, blah, blah, blah. I just want to use a little bit of a counter argument here, talking about, hey, the market is actually not driven as much as you like it to by narratives, because these narratives are generally been distilled and they're also delayed narratives, and also narratives that are being put out there to be a little bit more paternalistic, but I don't really tend to believe in any of that. I'm a little bit of a rebel. I like to look at the data. I look at what the charts actually showing me, because time and time again, over the last 5 to 10 years, if you've been in the market long enough, you know whatever it is that they're telling you is usually not what's actually happening. Now, I made a post here on X yesterday. I'm just going to go through here, and I do want to go through some charts on all of these different spaces, show you some representatives in terms of spaces that are involved in cryptocurrencies, fintech, self-driving cars, artificial intelligence, and quantum computers. Now, there are some that argue fundamentally that these are completely speculative, their use cases are dubious, and that these are shell companies not justifiable for their lofty valuation and nothing special due to their competitive threats. The truth is usually somewhere in the middle. I'm not going to say that these companies are not highly evaluated. I'm not going to say that these companies are sometimes questionable in terms of their valuation. But the very fact is that I'm going to show you the biggest argument I have for that is that if liquidity rises, it doesn't really matter. If you have increase in liquidity, it doesn't really matter because that's going to support growth. That's going to support speculation. Initially, it could be speculation, but if you have enough money being poured into the system, some of these ideas actually come into play and actually work. And a lot of these issues is that they're not actually completely speculative. Even quantum computers actually have some breakthroughs that are happening right now as we speak. So throughout the last few years, I've learned to listen to these arguments with great skepticism. I've learned that the market is always right. I look at the charts when I can, when there is a conflicting point of view here. Even if an idea is ahead of its time and proper business execution may not be possible yet, liquidity conditions can still lead to this prolonged irrational exuberance that could last for years. For example, if you are looking at the SPX over here, S&P 500 here, everybody's talking about the dot-com bubble, right? Dot-com bubble, dot-com bubble, dot-com bubble. How long did the dot-com bubble last? Can you imagine missing this rally over here before a decade of death and going sideways, doing nothing? Can you imagine if you missed the rally from 1995 all the way to 2000? Can you imagine you missing this big, giant push up outside the upper Bollinger Band here on a 6-month chart of SPX for 5 years straight because you think bubble, 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 bubble. Yeah, sure, it's a bubble, but you are doing yourself a disservice if you don't ride the bubble along with it, because it is important that you listen to the market rather than worry about narratives. The narratives might eventually play out. You might need a big correction to cool things off like we did over here for an entire decade, but you really want to ride this trend on the way up and not listen to the narratives, because sometimes the narratives are going to distract you from making money. Not financial advice, by the way. The market often knows something that conventional wisdom doesn't, and that we could be transforming into a more efficient world with innovations that bring great deflationary forces. The whole idea about money printing is not because they just want to keep printing money. Of course they do. They want to have you to vote for them. Politicians love printing money because that increases chances for economies to boom, that increases chances for people having jobs and whatnot. But the reason as to money printing is not because of the government wants to keep irrationally printing money, is because they are printing money because they have to keep the deflationary forces that are being brought up by all these different technological advancements, that they need to sustain growth of productivity by piling in liquidity in the companies in the forefront of that transformation. Skeptics look to the past and cites past stock bubbles. They talk about this all the time as reasons not to be involved in the market. I just showed you, right? I'm going to go back and dig back a little bit more in terms of the S&P 500 data here. Even though the market has the price in all these technological revolutions that continue to accelerate, you're talking about price for S&P 500 kept going up to the right here. You're talking about times currently that we cannot even imagine without the internet. We're talking about times here that we cannot imagine without television. You cannot talk about time here that we cannot envision without automobiles. The time over here in the 1800s are really terrible. You have no toilet paper. You have no really true machinery. Everybody just kind of sits around and like stares at wall. I was playing this Dead Red Redemption 2 the other day, and honestly, like they're just doing nothing. Like they're just waiting for the next job. What's gonna happen next? I don't know. Before next thing happens, what do? You sit there, you stare at the wall, and you move your thumbs around, and you go around different houses and look for like cans. Everything is very much of a. There's not much productivity that's happening over here. Huge productivity has happened since then, and the stock market had to price this in because of that. Now, looking at some of the years of over the last 40 years, right, in terms of what's happening, everybody's going to tell you the market's going to crash, market's going to crash, market's going to crash. Looking back at the 80s, right, the market crashed, sure, around 87, there was a big crash, around 1990, there was a big crash. People that were around back then, they remember this. It was scary. Crash. What happened here? Here's a dot-com bubble, big crash, right? Everybody remembers this. Big crash, everybody remembers that. These are sensational arguments that are just like, whatever. Like, the stock market just keeps going right into the upside, right? You are talking about other crashes here. What happens here in 2011? Ooh, that's scary. Right? 2015, 2016, a lot of people got the leverage over here. 2018, a lot of people got the leverage over there too. That was a scary market. Look at how scary it is. Not scary at all when you look at log, is it? Look at it during the COVID drop over here. That was pretty bad, right? Well, not really, because it didn't really matter. Looking at 2022, that was a pretty bad bear market for those that have experienced it. What do we do right now? We've came back and made all-time highs on the S&P 500 for a couple of years already. If you were scared over here, you're not making money, right? You don't want to be a permanent bear, even if you have crazy crashes like the dot-com bubble and the great financial crisis, because that's what the economy does. That's what money does until everything goes to crap. That's what's going to happen. I don't know if anyone they can really call the top and short a parabolically bullish market right now and not get their asses handed to them for years until they get it right when the crash actually comes. And even when the crash actually comes, I would argue that it doesn't really matter. I don't claim to know anything about the actual details of technical investments going on in the world right now, including all of those sectors I'm going to talk about. But it's a proper chartist with the proper tools and proper confluence from other technical analysis and technical analysts that I trust, including Danny, including Matt, including Tracker, including my collaborators such as Lucas7 and many others that you see on X. I see that speculative stocks in certain sectors are well positioned for breakouts right now, and that liquidity conditions continue to favor risk-on environment. Why do I say that? Look at IWM. IWM is going to be the most cyclical index here. What IWM is Russell 2000. It is a small cap index. Russell 2000, the small cap index fund here, is going to be a lot more economically sensitive to global liquidity conditions. The reason why is because they are more speculative. They are more high debt because they're small companies. They don't have a pile of cash like Apple in hand. What happens is whenever you have a hard time with global liquidity breaking out to the upside here, IWM ends up consolidating sideways over here underneath resistance, and that's the bear market over here, bear market over here, bear market over here, and we've experienced a bear market for IWM for quite some time. And whenever you have global liquidity breaking out, sometimes it can take 6 months to a year of a lag before, and there could be a backtest here, but it takes about 6 months to a year before that global liquidity is really being truly priced in and entering IWM, creating these God candles, then push price up to all-time highs. Right? That's what happens over and over and over and over again. These don't always have to be 4-year cycles, by the way. I actually argue that the Bitcoin 4-year cycle is probably not going to work out very well. The reason why that is because previously it was thought to be more from the supply side due to halving. Now is more integrated to traditional finance more than ever, and traditional finance is going to be a lot more coming from the prices being influenced by demand, with there having more global liquidity rising, with it already broken out of this long consolidation zone, back tested it last year, and global liquidity continues to go up. I think that money has to go somewhere, and I think it's going to eventually entering into more speculative plays, smaller cap stocks like IWM. This cycle has been a very, very long cycle because the liquidity cycle has been extremely long here. It's been stuck here for about 2.5, 3 years, whereas the previous liquidity cycle maybe closer to about 1.5 years, 2 years, maybe 3 years, maybe 2.5 years. But here is really like true 3-year liquidity cycle over here. We just finally broke above it last year, and we are at the verge of potentially breaking into all-time highs here on the Russell 2000 on IWM. We will see whether or not that works out or not. But I just want to basically reflect that the liquidity conditions are getting better and better and better. And because of that, the liquidity conditions will continue to favor a risk-on environment until proven otherwise. I am open to being completely wrong. The point of being on here on YouTube and X is to share a different point of view based on what I see. At some point, I want to make a video, and we're doing it right now. I want to talk about all these different sectors, and I want to talk about some of the representatives of each of these sectors. So let's just get right into it. Right? There's no reason to delay anymore. I want to talk first of all about the mining space, and a lot of people are already getting very excited about a few stocks that have broken out and started Palantiring. I talked about Palantiring in the traditional sense of technical analysis. A lot of people actually don't really buy into this concept, by the way. They're looking things, oh, it's overextended, we need to short, RSI is overheated, and they need to short. I don't really think that's the proper way to do technical analysis. I just think that when you hit escape velocity, like what IREN is doing, and I've talked about it exactly a year ago, about Palantir. About Palantir basically moving, I'm not going to show Palantir, but about Palantir basically is showing signs for escape velocity about a year ago, and it has proven to be correct there with that particular call. I'm seeing a lot of things that's happening with the mining space that are heavy with HPC, with AI. Miners are always going to be at a competitive edge here because they're going to always try to make the best use of the energy that's available and cheap energy that is available, and trying to optimize it as fast and as great as they can. And those that have high performance computing or HPC, and if they integrate AI into it, that's going to allow them to, number one, make the best out of the energy and the computing power that they have. Number two, that's going to allow them to diversify that energy and that resource into other fields as well, such as AI and cloud. That's exactly what's happening with a lot of these different companies here. IREN is the poster child. IREN's already making all-time highs here, and IREN's already broke about the 0.86. It looks like it wants to just have further escape velocity on the way up here. IREN has a full bullish expansion here, and a lot of people want to short IREN because of valuation. I don't see this trend ending anytime soon. I think if you are bearish on IREN, that's fine, but I would not short this thing because, not financial advice. Feel free to short it all you want because everybody has a role in the market. There's some people who like to back hold. There's some people who like to catch falling knives. There's some people who like to buy growing assets that are hitting growth acceleration, that are hitting escape velocity here on the charts. It looks like it wants to keep printing money. And there are those that want to try to short and try to call the top based on fundamentals. I would never get a lot of the other people. I think you know which one I am. With that said, IREN is the poster child. It looks very, very bullish. Right? What is another poster child here is CIFR, CIFR mining. What CIFR doing right now is looking like it wants to break about the 0.86. It is looking like it's got a full-blown expansion over here. It looks like it wants to hit some of these higher targets up above. It looks like it wants to make all-time high here eventually. We simply got rejected here, a previous all-time high here, which is not unexpected because the Bollinger Band is not as fully expanded as IREN to support price to push up that much higher. And we are a little bit overextended, and this cool down is completely expected. I would say that these charts, including another one that I would show you here, which is TeraWulf. TeraWulf also going through a very similar thing, although it's at a lower FIP level. It just broke the 0.618 over here like butter and is going to head to 0.707 over here. Bollinger Band is being expanded here to the upside. I think that you're going to have some further escape velocity, especially if you're going to break about the 0.707 and 0.786 levels up here. I think that the stock like this could continue to go up a lot higher over time. It has these resistance levels up above, but it's showing you great strength in terms of what these companies are doing. You're always going to have some laggards. I'm not going to show them, like Mara, like CleanSpark. Even they're entering HPC space, even though even they are trying to invest into those sort of deflationary forces that is going to be more beneficial. It's basically the cycles theme. If you want to follow the cycles theme, this is one of the major theme is high performance computing and AI. And these mining companies are extrapolating the best they can in terms of the available energy resources that they have and trying to optimize the best they can out of it. Now, while we're talking about the cryptocurrency spaces, a lot of people are actually, just hyped up on Ethereum. There's really not that much mention in terms of why Ethereum is important. The reason why people don't really mention why Ethereum is important is because most people are kind of looking at Ethereum as a liquidity play, and it is. I'm not going to argue that it's not. If you're looking at the weekly chart here, generally what happens with Ethereum is it goes through different cycles. I was just showing you the IWM cycle, right? The IWM cycle is over here. Ethereum is going through a very, very similar area of cycles. It's getting longer and longer, and the cycle is particularly long because the liquidity cycle for IWM is also very, very long. But looking at Ethereum, it's basically doing the same thing over and over again. Had big run up, consolidation sideways over here for years. You have a little bit of a deviation to the upside over here, to upside over here, and a deviation down here to the downside over here for liquidity grab. We're basically showing the same market structure here where you have a liquidity zone, we have target breaking above of it, and we have a liquidity grab that just happened back in April. And we broke above all these different resistance here. And currently, we're back testing the cycle liquidity zone. Back testing the cycle liquidity zone can lead to a more parabolic move to the upside here. Why is Ethereum something that people are looking into? Besides the fact that they want to make money out of it. Ethereum, you actually have use cases for Ethereum. If you're talking about the last cycle, there are a lot of speculation about decentralized finance, about how it can reduce transactional costs by really like 70%. You're bypassing any of those like banking fees. The banking system is extremely inefficient. You're also talking about globalization as well. All of these are in favor for Ethereum. Ethereum is actually a programmable crypto. You can write smart contracts on it. You can actually have Ethereum do useful things in the world. It's not just tokenization. It's just not just NFTs. There's a lot of use cases for Ethereum that actually still hasn't really been popularized or has been discovered yet. And the chart looks like it wants to boom. A lot of times, the use cases of Ethereum really was ambiguous until you have a big move up, and people are always going to try to justify with a narrative here, and people are going to start using Ethereum when it's hot. I think it's going to get hot, and I think there's probably going to be some new narratives that are yet to come in terms of use cases for Ethereum moving forward, because it is a speculative asset, and because the use cases has not been fully explored. That is what happens when you have an increase in global liquidity. It goes into speculation, and if you go against the grain, if you think that these all speculative stuff all is going to lead to a big giant bubble, again, you're going to miss. I want to keep on illustrating this point here. If you think that all of this is a giant bubble, you are going to potentially miss up to 5 years of gains over here before the bubble crash, and nobody knows when that's going to be. That's my thought on Ethereum. Now, you also have another thing that is not going away, which is Solana. What is Solana doing right now? Solana's looking great, actually. It's consolidated sideways over here for about a year and a half, but guess what? Cup handle, right? It's forming a big giant cup and handle formation. There is all the reasons based on technicals to believe that it is going to form some all-time highs here whenever it's done consolidating this zone over here. It has broken back above the 0.86 log fib here, and it's consolidated sideways here for long enough. What is it doing right now? Well, it is trying to break above previous all-time high, having a hard time doing it. It's trying to backtest the 0.76 linear fib over here. We'll see whether or not it closed the week above the 206 level. But that's what Solana is doing. I think Solana overall is still a very, very bullish chart. There's really nothing for me to really get worried about. Even if I look at others is the cryptocurrency market cap, excluding the top 10 coins. So you're talking about the really speculative stuff. All it's really doing right now with this other chart is it spent about 2 months trying to break out the weekly Ichimoku cloud, and now is backtesting it after a true breakout. This is healthy. This is bullish, but a lot of people don't feel that way. A lot of people feel that this is all bearish and backtesting sucks, and that this bull market's over, and that this is a triple top or whatever, double top, triple top, whatever. When the reality is that if you look at the monthly, it's also reclaiming the monthly tank in here as support now. This is also tested the cloud here after breakout, and it's found support. Is breaking back above all these different resistance levels over here. Others is looking great. The cryptocurrency space overall is looking great. To me, again, that reflects on in terms of what happens with global liquidity, and maybe there's just going to be some significant delay here, and it has been delayed here for almost the entire year last year. But the cryptocurrency space is looking great, right? You have speculative assets looking pretty decent here. What about fintech? You have fintech such as Robinhood, and Robinhood has been banking. They are growing like crazy, and they have hit escape velocity. They have break the 0.86 over here, and they were going to make all-time highs, and they are. Because of that, Bollinger Band continues to expand here to the upside and to the downside, right? There's no slowing down of this bull trend over here. What's Robinhood doing? They're making it a lot easier to trade. They're making it a lot easier to invest, and they're just making it a lot more generationally accessible in terms of finance. This is what you get rewarded for that. They're growing because of that, right? They are able to cut out a lot of fees because they're not brick and mortar. They are also able to use AI to make their operations a lot more efficient, right? Same thing can be said about SOFI. SOFI is also another one of those stocks that is about to break into all-time highs over here with full Bollinger Band expansion after it broke about the 0.86. They're growing like crazy too. Why are they growing crazy? Well, it's because what their products are fits the generation the best. They're making traditional finance products a lot more accessible to the younger generation, and they're also doing it in ways that are a lot more efficient. They're incorporating AI into their strategies, and the growth is showing here in the charts, right? You are also looking at other things such as Shopify here. What is Shopify doing? They are basically the leader for small businesses online in terms of providing services that small businesses can tap into to have their small online shops. Like, these businesses don't have to figure it out anymore. Shopify's already figured out for them in this very, very scalable way. As a result, you end up getting Shopify getting hugely rewarded over since its IPO. You did have a liquidity crunch here that led to a big giant downturn here in 2022, but since then it's been forming higher highs and higher lows, and is basically getting close to challenging the previous all-time high over here. It is being rewarded because it's making the world easier and it's breaking deflationary forces. What other thing is happening? Affirm. Affirm is a tech company first and foremost. They basically use AI to help with risk assessment, underwriting, And they also use different AIs to help with promotional sorry, I'm kind of stuttering here a little bit. They're basically using AI to help with merchants, to help with promotion. It's a big part of their buy now, pay later strategy. And because this is also extremely economically sensitive stock, and they're also leveraging AI to help with their growth, it is showing in reflection of higher highs and higher lows, and it's about to break above the 0.76 over here. After a big giant downtrend here on global liquidity crunch, we are reversing this trend, and I think once it breaks above 0.76 over here, it's going to open up for a lot more all-time high stuff over here. This is one of those that are more speculative plays they're playing out, and I cannot look at a chart like a firm and say that the liquidity cycle is over. I just cannot. I don't know what else to really say about that. PayPal has been extremely brutalized. Is it because they don't use AI? No. They are extremely integrative. They are working behind the scenes. They have partnership with Google for years. They are going to do just fine. Why is it not being reflected here in the price? Well, who knows? Maybe because it's not being reflected in growth. A lot of people think that this is more of a boomer fintech name. But in reality, if you look at a higher time frame chart, even look at the 2-month chart over here, is forming a bullish band squeeze over here, and is basically trying to reclaim this 40-month moving average. I think it's just a lot slower than the others, and I think PayPal is going to do just fine here in the space. They just have to have the narratives to go out there to justify for evaluation expansion, which I think will happen with PayPal. But right now it's a little bit of dead money, so I'm probably just going to leave this alone. But the market is rewarding a lot of companies that are basically the theme of the market right now. Right? I show you about HPC. I show you about smart contracts, Ethereum, Solana, cryptocurrency. I show you fintech. What else is next? What about self-driving cars? Can you imagine the amount of deflationary forces if you no longer really need drivers anymore? Can you imagine the amount of deflationary forces where you no longer need to drive, but you have the option to not do so? Many years ago, when you're talking about movies like Trading Places, you have folks like Eddie Murphy having drivers for them. Do you really need to hire a driver, pay health benefits, make sure that the liability is being absorbed, make sure that they get their holidays, make sure that they can find all the maps and learn all the maps and try to figure out where to go? Do you really need to interact with another human being that you may or may not like, that pretends that they like you, if you have money to hire a driver? Or do you want to just use FSD? Do you want to use a lot of FSD full self-driving, by the way? I don't see any reason as to why you listen to this video and not know what FSD is. Do you really want to hire a bunch of truck drivers, pay them benefits? Those truck drivers are not having the best quality of life, by the way. They have neck pain, they have back pain, they don't have the best posture, they're pulling these big giant wheels all day. It hurts their neck, it hurts their back. And they basically drive for a long period of time. It's an extremely stressful job because you have to be alert all the time to stay alive. Guess what happens? You go to diners, you eat bad food, and you might even go to some pretty seedy places on the highway. So I don't think it's necessarily the best lifestyle. A lot of folks end up smoking because it's such a stressful job. And there is a huge, disadvantage when it comes to those kinds of things. Now, I'm not going to try to say that they should have their jobs taken away. That's not what I'm trying to say. What I'm trying to say is that it is not the most efficient way to utilize human resources. And it is not the most efficient way to, how do I say this? With things that could potentially be taken away, and this could be a really bad thing for the short term for a lot of people who need jobs to support their family and don't have the skill set to really otherwise get job support. But it's a huge deflationary force, I guess is what I'm trying to say. Are we there yet? It's arguable. There are some folks that are extremely scared about full self-driving, about cars that drive themselves. There are people that make fun of folks on Instagram posting videos on FSD. I don't know what the right answer is. All I know is that the technology is getting better and better over time. All I know is that there are certain economies, such as the US economy and the Chinese economy, that feel strongly about this, that want to introduce this deflationary force, that want to be in the forefront of something that could be a huge deflationary force into their economy. And there is going to be hiccups, there's going to be accidents, there's going to be problems. I think that with me experiencing FSD with Tesla on first hand, there are moments where I am kind of like, I don't know about this. With that said, you have to keep trying, and I'm seeing tremendous growth in terms of their technology firsthand, even just over the last year. Like it has significantly improved. And I think that with liquidity cycle, I'm going to keep pointing to the IWM chart here and the global liquidity chart here. With liquidity cycle potentially about to have all-time high breakouts for IWM and Russell 2000, which is a reflection in terms of what the overall market is wanting to do. With that in mind, I think that a stock like Tesla, which is also very economically sensitive, by the way, if you overlay Tesla and IWM, it actually looks very, very similar. With the dips, with the troughs and the peaks, it actually looks very, very similar. And it's also very extremely sensitive to global liquidity, which I'm going to pull up here real quick, right? Very sensitive to global liquidity. So the way I see it is if there's a rise in global liquidity, I think Tesla is going to benefit from this because it is a speculation that we're going to solve a very, very important problem. And that if you have increased money, it should go to companies like this that are trying to solve the problem. I'm not saying that they have it completely solved, but it's important to see that these companies are getting rewarded and that they continue to do what they're doing. Tesla is about to make all-time highs. Tesla has broken about the 0.786 log fib and linear fib, by the way, right? But again, breaking about 0.86 log fib here. Last time the Bollinger Band just wasn't expanding fast enough. Here we have the upper Bollinger Band expanding here. Here we're starting to have a little bit of low Bollinger Band expansion to the downward side over here. But this is what I'm talking about. This is becoming more parabolic over here. The morphology over here looks very, very similar to what it did over here before the breakout. You have an initial Bollinger Band expansion over here, consolidating sideways over here, and now re-expansion, right? Initial squeeze expansion over here, sideways over for quite some time, and expansion leads to a pretty decent move up. I can talk a little bit more about technicals for Tesla, but I already spent a long time talking about this for like 10 minutes on Danny's Patreon. So if you guys want to look into a video of me talking about these different technical analysis on a weekly basis, Danny's Patreon is going to be the way to go. But I just cannot be bearish on Tesla right now. I'm sorry. Now, let's not just focusing on Tesla here. Let's talk a little bit about what about Waymo? What about Waymo with Google? Waymo with Google. Google is an AI leader. Waymo is just a small part. They're geofans, so they're not going to be able to be as scalable as Tesla. But even with Google chart here, there is nothing bearish about it because you got full Bollinger expansion and things just keeps on wanting to kind of break to the up and up over here. I don't think this is a reflection that we are hitting a parabolic top here. Something like this can happen for a very long time. We just backtested the 20-month moving average. This is not a typical way to end a bull market. And also on top of that, usually on the end of a bull market, you don't really have blow off top the majority of the time. You're actually going to end up having some consolidation sideways over here. Perfect example here in 2022 bear market. You have a bull trend and you have exhaustion. Once you break down underneath the 20-month moving average and have a bearish backtest, not able to break above, this when you have further continuation here, right? Here you held the 20-month moving average just fine, and here it just ended up shooting way up. This is not the way that a bull market should end. Waymo is doing very well, right? As reflected by Google's stock prices overall, even though it's just a very, very small part of the operations here, which is probably not a good reflection in terms of what full self-driving could do. Let's look at some of the other forefronts of full self-driving companies. And with those, you really have to look a little bit more closer to China. Xiaomi make cars. Xiaomi has been an extremely bullish chart over here. And Xiaomi has been finding some resistance up here at 1.272, and it looks like it's consulting sideways over for a very long time with Bollinger contraction here, but it's already made huge gains from $8 all the way to like the 50s and 60s. I think Xiaomi would probably need to figure out the consolidation over here to figure out what it wants to do next, but it is looking pretty decent here over the last couple of years, right? And it's been quietly being rewarded. What is a chart that is also doing, some level of autonomous driving, and that price is going to get rewarded here is Xiaopeng XPEV. This both Xiaopeng XPEV as well as Xiaomi, they're just level 2 in terms of their autonomous driving, but they are getting better and better. And I think the Chinese regulation, when it comes to these kinds of things, are actually quite loose. So I think they're actually going to be able to be in the right environment for further innovation, if you will. Double bottom, cup and handle, break above the 0.5, Bollinger Band expansion. There's nothing bearish about this chart. Actually, it's probably one of the better charts in the overall market. Yeah, so if you're looking at something like this, you're thinking to yourself like, okay, it might actually be a real thing. And if liquidity keeps on pouring into them, that might actually help them to help, having more money and resources to continue to have more technological breakthroughs and innovation, right? That would be a great thing if it ends up happening. Now, when you're talking about full self-driving, let's go ahead and dive into AI. What is the biggest AI company that is the forefront of this bull market where everybody is arguing about the valuation? Is Palantir. How has Palantir done over the last year after it had the full Bollinger Band expansion and after it broke about the 0.86? It went straight up for a whole year. And people who bought into that down here and over here are being rewarded very handsomely. It is breaking about the 1.618. Looks like it wants to have some further bullish continuation. It's just ridiculous, right? What about NVDA? What are we talking about here with NVDA? That's also our AI leader, right? I mean, I don't even really need to talk about the fundamentals here. It's been pushing up, consolidating sideways over here to cool down this big giant move up here above, holding the rising 20-month moving average, which means another leg up, and that's what we're experiencing right now. NVIDIA looks just fine, right? I just don't know whether or not we're going to be that bearish moving forward. I just show you the Google chart, right? Another AI leader, Microsoft, what is it doing? Turning off the Bollinger Band over here. It's basically got rejected here at the arc, but eventually broke through, right? After you break through, usually you're going to end up having some further bullish continuation to the next arc. This chart has been so bullish here over the last 2 decades that I'm running out of space here for the Gantt chart. It's going to probably keep going up here to around the 700s. It's a pretty bullish chart overall, and this is one of the market leaders here. Taking a step back here, what is AI doing? You hear about the white collar recession, which is also why I think the Fed has to print money, by the way. You have the deflationary forces coming in, you have increased productivity, companies are actually becoming more efficient, and you have a bunch of people that are not really contributing as much anymore when it comes to productivity in terms of white collar jobs. And white collar recession is real. People are getting laid off left and right from these big tech companies. Palantir is basically saying that they're going to right size their company downwards because they really don't see the need for them to have all these different employees for years to come. And that's going to be a trend rather than a anomaly. For all of these different companies, they're going to use more chips, they're going to use more AI, they're going to use more high performance computing, they're going to use more cloud. They're going to need less of the white collar folks that have skill sets that may be relevant, but are not as good as the technological advancements that are going on right now. I don't know what else to say. I mean, all of this really lead to more speculation and more money printing. So it's important to own assets because of the current environment that it is in right now. I want to finish this video by talking about the supposedly controversial thing about the market, which is quantum computing. Quantum computing is mostly speculative. I agree with that. Quantum computing is mostly speculative. There are four major companies that I follow. One is IONQ, another one is RGTI, QBTS, and QUBT. I'm starting a position in QBT. Actually, I've been building a position in QBT. I'll tell you a little bit as to why I end up picking this one over the others. And they're all kind of hitting resistance. You know, if you want to talk about technicals, sure, I'll just get that out of the way here. IONQ, very bullish. Now it's at resistance, 1.272. I cannot be that bearish because you have continued to have Bollinger Band expansion here. There's no sign that this bull trend is ending anytime soon. This thing could last for years. GTI, what happens? Same thing. You're hitting 1.272 resistance up here, right? QBTS, what's happening right now? You're getting closer to 1.272 foot level over here, right? QBT, why am I entering this? Well, because it's slower. I get to buy more and build a position that hasn't moved yet. It looks like it's breaking about the 0.618 over here, which has been resistance over here for a very, very long time. If it breaks above, it's going to end up exploding to the upside here. Out of all four of these companies is the smallest market cap. The market capitalization is only 3 billion, whereas for QBTS and for RGTI, they're about 10 billion. And for IONQ is the biggest market cap of them all, is 20 billion. All of these are still extremely small market caps, by the way. And because they're small market caps, you remember what I said about small caps, about IWM, about increase in global liquidity, about financially sensitive stocks that are more speculative, right? This is what I'm talking about. It's speculative, but it's not all hype. There's actually some substance here, and that's the thing that trips people off, is because the stock just keeps on going up during this liquidity cycle and nobody knows when it's going to end, and the valuation doesn't make sense. Eventually, does it have to crash down? Yeah, sure. Or liquidity cycle can just keep going for years and people just get left behind, and within a few years they actually solved their qubit problems. They actually solved these error problems, and they actually are justifying their valuations, right? Over the years. We don't know that. Is it gonna burst like the dot-com bubble? Maybe. If the valuation gets crazy, these companies right now are like 100 times or 1,000 times their sales, is ridiculous, right? On the other hand, they're also small cap. And if the liquidity condition continues to be well, these company stock prices can continue to do well as well, right? They have high cash burn, they have negative margin, they have sky-high valuation. The market doesn't really care right now, and the market is always right. I'm gonna leave you on the last thought here, and I'm gonna end this really long video here with the last thought. The last thought is, no matter what's going on here, and I'm not political. I don't like to talk politics. I don't care about any of that. All I'm seeing is that there are some pretty pathetic attempts to reverse globalization, when the reality is that the technological advancements that you're seeing right here, well, on top of that, is also trying to save laborers and try to give more jobs to the US, you know, to help with the blue collar, help the white collar, all these different policies that are in place to try to do that. I completely understand that there's a political push to try to help with these folks, and they are suffering through all of this because they may not be benefiting from the market. Majority of people don't benefit from a market like this, which is important to own assets, right? But you have people that are losing their jobs while the economy grows. Why is that? Well, you can blame it on two things. Thing number one, you can blame it on technological advancements, that these folks are no longer needed. Majority of them are middle management anyway, which honestly, like, I don't know if you read the book called BS Jobs. I tend to agree with that. So companies are are basically lean sizing. They are trying to reduce their forces. They try to reduce their operational costs and reduce labor. Labor is going to be the biggest cost of them all. If you can reduce labor, that's always going to be the first thing they're going to go to. You have that force. On top of that, you also have all these different forces that are going to basically be promoting globalization. What do you mean by promoting globalization? Well, a majority of these mining companies, they basically trying to find the cheapest energy in the world. They are globalized, right? They're not just purely in the U.S. Even if a lot of the executive headquarters and things like that are based in the U.S., the majority of these that are doing extremely well are not necessarily U.S. based. That's thing number one. Thing number two, you have DeFi, you have Ethereum. That could potentially be a theme of this cycle. And Ethereum basically is promoting deflationary forces as well as globalization, right? Decentralized finance, globalization, people don't have bank accounts that are tying to the specific countries, can have access to finances through the internet. If you have a cell phone, you can do this. You don't need anybody else to tell you what to do. You just have to trust the code, right? Increasing globalization. What other things are increasing globalization? Fintech. They are making banks more efficient. They are running all these different algorithms to try to make it more and more accessible. Shopify is not even a US company. You're talking about a company like PayPal that is operating internationally, promoting globalization of payments. You're talking about automated driving, right, that are not just being developed here in the US, but also developing internationally, in Japan too. You are talking about AI, and AI is not just, a majority of companies are still US based, don't get me wrong. Palantir is not going away anytime soon. NVDA is not going away anytime soon. But a lot of this is also driven by a lot of companies outside the US, right? Most of the chips are being made by Taiwan, and their stock prices are being reflected by that. You also have a lot of robotics and AI that are being done in China and Japan. Japan economy is going back up. I think the Japanese economy might actually end up being saved by the next wave of what's going to happen. And the Nikkei is looking extremely bullish right here, by the way, with full bunch of expansion. Look like it wants to make a next lick up. What was the problem with the Japanese economy for decades, besides the bubble popping, which which is arguably not the reason for sustained bearishness for the Japanese market until recently, is because they don't make children and they don't have growth in their economy. But now the world is not making any kids anymore. You have growth in the economy based on two things. One is consumption, the other one is productivity. The Japanese market has not really been able to grow because they don't have enough population growth to sustain consumption, and they have to keep printing money for decades to keep their economy alive. They don't have to do that anymore because there is now increase in productivity that might justify for money printing. And that's happening all across the world. With globalization happening, with increase in global liquidity happening all across the world, with the Nikkei here looking to form more all-time highs here. It already formed all-time high here back in 2024. With it continues to form all-time highs here, I cannot really be that bearish about the world right now. On top of that, what else can I not be bearish right now is the Hang Seng. Because guess what? They are printing money like crazy. The Hang Seng is about to hit the 0.786 log fib over here. You got a trend line over here. I don't think it's going to break through. I think it's going to consolidate over here. But there's a big Adam and Eve double bottom over here, and it's playing out. And the Chinese market just keeps on going to the up and up. It broke through the monthly Ichimoku cloud. Looks like it wants to have some further bullish continuation. So as far as I'm concerned, anybody who is telling you from a narrative base that a crash is coming, that all these companies are just all shell companies, and that you should not put your money into investing in any of these because the Buffett indicator has been high. It's been high for many years, by the way. And anyway, I'll talk about the Buffett indicator here, maybe in a separate video at a separate time. What I'm trying to say here is this. I don't want people to just listen to narratives. I want people to listen to the data that is underlaying it. And the data that's underlaying it is global liquidity, and global liquidity is rising. Cycle looks like it wants to continue to the upside. And I want to cut off all the noise as much as possible, despite the fact that we are going to experience volatility in short term. I don't know what's going to happen over the next few months. It could drop back down. It could crash down here and go down lower and form a higher low before pushing up. I don't know the answer to that, right? But all I'm saying is that global liquidity is on the up and up. So the trend is going to be on the up and up. I don't want to get swayed by any short-term narratives that are going to happen during a pullback. And I want to keep my eyes on the price because I'm a cat. Alright guys, thanks so much for listening to this 15-minute video here, me ranting and showing you some charts and trying to kind of tell you a bigger picture idea in terms of what I'm seeing here with the economy, with the markets. Thank you so much for listening. Have a good one. Bye.